just to very quickly once again welcome everyone. My name is Tony Parry from the Institute of IT Professionals. It's my absolute privilege and pleasure to welcome you to this webinar this afternoon, and especially, of course, our well-known guest speaker, Mr. John Singh, who is an IITPSA board member. He's chair of our Audit and Risk Committee. He's also, John, correct me if I'm wrong, a senior analyst at the SPA Group.
That's correct, yeah.
Is that the right title? And John leads our Bitcoin and Blockchain Special Interest Group. So without further ado, John, I shall hand over to you, and thanks for presenting to us this afternoon on the 2024 Bitcoin halving, everything we need to know. Over to you, John. Thanks a lot.
Thank you very much, Tony, for the introduction, and good afternoon to the audience that have joined. So the topic of the presentation is the Bitcoin halving, and in terms of contents, we will look at some of the technical details behind the Bitcoin halving and just try to show what it actually means in terms of the software itself, and then we'll look at impact on supply and demand, look at Bitcoin mining profitability, and then lastly, the correlation to macro events in the greater financial system. So the Bitcoin halving itself is a programmed event in the Bitcoin software that halves the reward given to miners for processing transactions. Remember, in the Bitcoin ecosystem, miners play a very important role. They solve the proof of work problem, and they earn the right to publish the block to the rest of the network. And their reward for that is the block reward and also transaction fees. So the Bitcoin halving occurs after every 210,000 blocks have been mined, or approximately every 4 years. It is quite difficult to give a precise date for this year's halving. It will be somewhere between 15th to 20th April, but it depends as to when the correct block is mined. The primary purpose of halving is to control Bitcoin supply, ensuring it has a maximum cap of 21 million coins. The supply continues to grow at a decreasing rate until 2140. So if we look at the screenshot here, what I'm showing is the source code in the Bitcoin software. So it is in a source file called validation.cpp. It's a C source file, and it has a procedure called get block subsidy. So what happens is that it passes in the block height, which is the number of blocks currently in the blockchain, and also some consensus parameters. So it divides the block height by 210,000 to get the number of halvings, and if it's less than 64 halvings, it will then try and do a calculation to work out the number of coins. So it multiplies 50 by coin, which is a constant, which equates to 100 million satoshis. Does that multiplication and does a binary right shift to do the halving. So the software itself uses a binary right shift instead of a division by 2 for efficiency reasons, because it's much quicker to do it that way. It's not important to understand the code, but I think it's good to see that it's not a large bunch of code that is doing this processing. It is quite simple for software developers to be able to read and understand this. So it's not a big mystical operation happening in the background. It's a relatively simple process, and it's important to understand that it's the simplicity of the logic behind it. Bitcoin has this concept of difficulty adjustment. So the quantity of Bitcoins created is pre-programmed, so it cannot be altered no matter how much energy is expended on proof of work. So Bitcoin has this process called difficulty adjustment, that ensures a block is produced every 10 minutes. If processing power increases, then Bitcoin will increase the difficulty of the proof of work problem. So that's an important point, because even if mining equipment, the application-specific integrated circuits used by miners, even if they get more efficient and powerful, the difficulty adjustment makes sure that the blocks are actually produced every 10 minutes by increasing the complexity of the proof of work problem. So difficulty adjustment is the most reliable technology to making hard money and limiting the stock to flow ratio from rising, and it makes Bitcoin different from every other money out there. So if we look at supply and demand, initially in 2009, when Bitcoin was first used, the block reward was 50 Bitcoins. In 2012, it was halved to 25, but by that time, 50% of all BTC had already been mined. In 2016, it was halved to 12.5, and 75% of all Bitcoin was mined. In 2020, it was halved to 6.25. By that time, 87.5% of all Bitcoin had been mined. In 2024, we see that the block reward will halve again to 3.125, and by that time 93.75% of all Bitcoin would have been mined. And you can see that as the years continue going by, there'll be a decreasing rate of issuance, and Bitcoin will slowly grind its way to 2140, where the last Bitcoin will be mined. So Bitcoin has the scarcity, so it has digital scarcity because it cannot be reproduced infinitely. It's a digital good that is transferred and is no longer owned by the sender. So you cannot repeatedly send a Bitcoin or double spend it. It also has absolute scarcity. It's the only liquid commodity with a set fixed quantity of 21 million coins that cannot be increased. There's also supply scarcity. The issuance rate halves every 4 years, which means fewer new coins are available. So this brings us to the concept of hard money. Bitcoin is hard because it's hard to increase the supply of money, and it's known as a hard money. Money's hardness is defined by the stock or existing supply, and the flow, which is production or new supply of money. The higher the ratio of stock to flow, the harder is the money, and Bitcoin is by definition a hard money. So we can contrast this to money in our fiat system, which is money supplied by the government, so money like the rand or dollar. So this can be printed by the central bank, and there's various policies, monetary policies, that allow the printing of money. And sometimes what we see is that the flow of money into the system exceeds the existing supply, and that is what devalues currencies like the dollar and the rand, and makes it the purchasing power weaker. So if we look at the price impact of the halving, so this is a graph done by an analyst called Rect Capital. So he's done some analysis on what happens during a halving. So we're going to look back in 2020 just to understand some of the events that happened. So we see there's a light blue block here. That signifies the pre-halving rally, where the price of Bitcoin increases quite rapidly about 60 days before the halving event. And then at the halving event itself, there normally is a few weeks before the halving, there normally is a retrace. And then into the halving and a few weeks afterwards, there's an accumulation shown by the peach block. So the price doesn't really go too far in any direction. It sits in a sideways motion for a few weeks. Then eventually, a few weeks after the halving, there is normally a parabolic increase in the price as shown by the green block. So we're expecting a similar kind of situation in 2024. We already have had the pre-halving rally. We have had a pullback and also starting to accumulate into the halving, and we probably will still accumulate after it for a few weeks. And towards the middle of May, we could expect a very sharp increase in the price of Bitcoin, possibly moving towards the $100,000 mark per Bitcoin. So due to past events and how halvings have worked in the past, we can, with high probability, see that a similar thing will happen in 2024 as well. So we can expect a parabolic rise a few weeks after the halving. So remember, when the halving actually takes place, somewhere between 15th and 20th April, there won't be an immediate price increase because the halving is a well-known event, so it's already been priced into Bitcoin already. So it's not a surprise to the market. So the price won't increase right then, but it will a few weeks afterwards, after the effect of the decrease in issuance starts taking effect on the market, and other factors will also influence the price rise, which we will talk about a little bit later on. So with the halving itself, so as mentioned in the last slide, there is a pre-halving rally about 60 days before the halving. There's a pre-halving retrace about 3 weeks before the halving, and then there's a reaccumulation zone into a few weeks after the halving, and then a parabolic rise in the Bitcoin price. And we're expecting the same thing to happen in the 2024 halving as well. The other factor which is been quite influential is exchange traded funds. So the exchange traded funds are those financial institutes that now want to offer Bitcoin to its investors, and they have, institutionalized Bitcoin, and they have had quite a high demand in the last few weeks. So if we look at this graph being shown here, the orange shapes is the issuance rate of Bitcoin. You can see it's quite steady over the last couple of months. However, if we look at the blue line graph, that is the demand from the ETFs, and you can see it has spiked quite high over the last few months, and it far exceeds the issuance rate of Bitcoin. So demand is exceeding the actual supply of Bitcoin, and we did see a very sharp increase in the price of Bitcoin in the last few weeks. So that's one of the factors that have contributed to the pre-halving rally that we have seen in the last few, in the last 60 days before the halving event. So the ETFs, they are exchange traded funds. They allow Bitcoin investment without investors going to the trouble of creating wallets, storing keys, or buying from crypto exchanges. Obviously, if you are a person that likes to control their money and the ownership of it, then storing your own keys is not a problem. But there are people that prefer an institution to manage the money and to manage that aspect of it. And this is what these exchange traded funds are offering to investors. So on January 10th of 2024, the Security and Exchange Commission of the USA, also known as the SEC, approved the first ever Bitcoin ETF, which created large demand for Bitcoin from these institutional ETFs. So the ETFs are actually removing from the market several times the quantity of Bitcoin being issued every day. This makes demand greater than supply, pushing up the price of Bitcoin, which we have seen happening recently. So this particular graph on miner profitability is from a very good analyst and charting website called Glassnode, and they show analysis on various aspects of Bitcoin, analyzing data from the blockchain. So this particular graph is on miner profitability, and The black line is the price of Bitcoin. The orange line is the miner profitability. So what we see is that in 2022 and thereafter, there was a sharp decline in the profitability of miners, but that was in accordance to the decrease in price of Bitcoin over the same period. So when the price of Bitcoin falls, miner profitability will obviously fall as well. We also see that with the uptick in the Bitcoin price, miner profitability has also increased. When it comes to the halving itself, with the reward being cut in half, we do see that impacting miner profitability because there's lesser reward. That will be offset by transaction fees, and also we're expecting quite a big price increase in Bitcoin after May, and that will also help miners be profitable. So the reduction in the halving from 6 to 3 Bitcoin will double the BTC production cost for miners, making it harder to be profitable. Transaction fees will offset some of the increased costs, but income stream will be more volatile. Production costs for the least efficient miners are expected to double to about $66,000 per Bitcoin. This graph is also one on miner profitability, but it also shows production costs. So the orange line is Bitcoin miner profitability, the blue line is production costs, and the charcoal gray line is the Bitcoin price. So again, we see there have been periods, especially in 2022 and early 23, when there was a bear market, where the profitability of miners has actually decreased to an extent that the production cost was greater than profitability. So that obviously left many miners in serious consequences, because it's very difficult to survive when profitability doesn't exceed your production costs. However, in 2024 and late 2023, there has been an uptick in the Bitcoin price, and we can see that miner profitability is now exceeding production costs. So again, the production costs will increase after the halving due to various factors, and also because the issuance will decrease to 3.125. That's going to impact the ability of miners to stay profitable. So miner revenue and profitability is linked to the Bitcoin price. Also, mining requires management of costs and timing of mining rig expansion and upgrades. So miners use very specialized equipment called application-specific integration circuits, and they are being modernized and upgraded all the time to become more efficient. So it's important for miners to be able to plan and ensure that their equipment is always being upgraded. So in bullish markets, miners have more fiat-denominated income and can invest in newer generation mining rigs. This leads to an increase in hash rate and increasing difficulty. In bearish markets, miners have less fiat-denominated income, but the same fixed cost to pay. In long bear markets, miners can shut down and leads to decrease in the hash rate and mining difficulty. This particular graph here shows the miner expenses, and we see each mining farm or organization being represented here. Not all of them, but the top ones. So on the extreme left, we see that there's a mining operation, and it has quite low electricity costs in blue. In black, the black is the interest costs, and the light green is administration and other fees. So on the extreme left, we see one of the mining operations is quite efficient. It is seen to be below $30,000 after the halving, and because of that, they have a good chance to remain profitable and in business after the halving. In contrast to that, on the extreme right, we see another operation here, Argo Blockchain. They have quite high electricity costs, high interest payments because they've obviously taken out loans. Then the green shows that it has fairly high administration costs. So their costs are pushing over the $60,000 per Bitcoin mark, and they can struggle quite a bit because it's especially if the price of Bitcoin doesn't increase to very high levels. So it depends on the mining operation and the costs and how they control them that determines the ability of miners to survive. Those that can manage their costs and keep electricity costs down will have a better chance of survival. The next item we will look at is the macro economy and various indicators in the broader financial system. So the first indicator we will look at is the CPI, or Consumer Price Index. So this is a measure of a basket of goods that consumers normally buy, and is tracked over a period of time. So we see in 21 and 2022 there's been a sharp rise in the Consumer Price Index, and accordingly a sharp rise in inflation too, and has hit levels of about 9%. Subsequently, it has come down to about 3% due to various measures taken by the Federal Reserve Bank, and it is now seen to continue in this way for the foreseeable next few months or so. So you can see that CPI has been brought under control. However, CPI does have an impact. So the Consumer Price Index is a measure of the change in prices of a basket of goods and services over time, and is used to track inflation. During times of high inflation, people will spend money on energy and food and not on crypto, and this will cause the price of crypto to fall. So people will tend to spend money on the basics and not on high risk investments, and that can impact the price of crypto and bring it down. At the same time, crypto is also an effective hedge against inflation and can be seen as a store of value that is not eroded by inflation. So you'll also see people holding Bitcoin as well to try and beat inflation. So it has a balancing effect, but in general, a high inflation does impact the price of Bitcoin negatively. The next indicator is the federal funds rate. So this is done by the Federal Market Committee, and what we see is that in prior to 2023, the interest rates were quite low, close to zero. Then the funds rate was hiked continuously over a period of many months until it reached 5.25%. It has now since stabilized in the last few months to a constant rate of 5.25. This has quite an impact because the federal funds rate is an interest rate and is set by the Federal Open Markets Committee, or FOMC. So it represents the rate that banks charge other banks when they lend one another money. Banks, so that's the normal consumer banks, use this as a benchmark when setting rates on lending products and saving accounts. During times of high inflation, the Fed will hike this federal funds rate to clamp down on demand and reduce prices. It also slows down borrowing and encourages saving. The impact of it, when the interest rates increase, companies and individuals borrow less and also pay more on loans, giving them lesser disposable income to invest in crypto. Bonds, money market accounts, and savings accounts have higher interest rates and making it attractive and risk-free for investors to put their money to work there. So high-risk investments like Bitcoin or Ethereum become less attractive due to these, the high interest rates that can be received from fairly safe money market or accounts or bonds. The liquidity of money also increases, and there's less flow. The liquidity of money decreases. There's less flow of money into assets like crypto. So the next item to look at is the dollar index, or DXY. So the DXY is an index that measures the strength of the dollar against a basket of other currencies. And what we see is that in September and November of 2023, the dollar strength increased quite rapidly, and that was due to a hike in interest rates, high inflation, etc. And then subsequently in late November, early 2024, the strength of the dollar has weakened, and 2024 it is rising a fair amount again. The dollar itself has quite an impact and influence on the world economy. So 40% of global trade is done in dollars. 60% of currency reserves in countries are held in dollars. So it's used in currency reserves, trade invoices, and also used to service debt. So what happens is that if other currencies are strong in relation to the dollar, or the dollar is weak, then it's easier for these countries to be able to pay back their sovereign debt, and the cost to service is manageable. However, if the dollar strength increases and as a result other currencies weaken, then it's difficult for countries to pay back their sovereign debt, and makes it a real possibility that they default in the debt, which leads to much crisis and difficulty in those countries. The next graph is on yield spreads. So the blue line is the 10-year Treasury minus the 2-year Treasury, and the red line is the 10-year Treasury minus the 3-month Treasury. So when, for example, the blue line is above zero, then that means the 10-year Treasury is greater than the 2-year Treasury interest rates. And if the blue line goes below zero, that means the 10-year Treasury's interest rate is less than the 2-year Treasury. So when this kind of yield spread graph grows below zero, then it's a sign of distress in the economy, and it's normally like an early indicator that there is either recessions or severe economic stress that will be soon arriving. So a Treasury spread is the difference between yields on differing maturities. Typically, the 2-year and 10-year Treasury bonds are analyzed. The yield on the 10-year Treasury should be greater than the 2-year Treasury bond. However, when Fed interest rates increases quickly, then this can lead to 2-year Treasury bonds having higher yields. When the yield spread between the 2-year and 10-year Treasury bonds go into negative territory, this signals recession. It is generally not good for crypto when the yield curve inverts. I think normally you would expect an investment in a 10-year Treasury bond to have greater interest rates than a 2-year, and that's why it's a sign of economic distress when your 2-year interest rates suddenly become higher than the 10-year. So that's why it's a indicator of economic problems there. There's also elections that more or less fall in line with the halving year. So there will be elections in the USA, also South Africa, significant ones. And if we look at this graph, it would appear that elections are quite good for Bitcoin, because you can see the price has been steadily increasing through and beyond election years. However, it's there's various factors that are influencing this, and elections do have an impact in that various administrations have different policies regarding crypto and Bitcoin, and those that favor Bitcoin will obviously impact the price positively. But I think this works in accordance with other macro and other factors. So I don't think elections by themselves are a huge impact on the price, but the policies used by the administration will impact some of the price movement of Bitcoin and other crypto. So in summary, I've shown a lot of indicators and various other pieces of information, but I'm going to summarize it because just to be clear on what we've been saying. So the first top left, right? So if Bitcoin issuance goes down, which is what is going to happen in the halving, so the Bitcoin issuance is going to go down from 6 to 3.125. So when that happens, Bitcoin price generally goes up. If the Federal Reserve in the USA starts cutting interest rates, so they haven't as yet, but they're planning on a cut, and it may happen in June or later, but the market is very sure that there will be an interest rate cut this year. If the Fed cuts interest rates, the Bitcoin price will go up, because it's there'll be it's generally a good sign for crypto when interest rates start going down. If the consumer price index remains low and goes down, the Bitcoin price will go up. If the dollar weakens, Bitcoin price will go up. If the M2 money supply increases, so there's more liquidity in the system, then the Bitcoin price goes up. The yield curve stops inverting and starts going up, then the Bitcoin price also goes up. So when it comes to the halving, we can see there's a number of factors that influence or impact the price of Bitcoin. So we can't just say there's the decrease in Bitcoin issuance that is causing it. It certainly does have a bearing on what happens, but there's also a wide array of economic factors also working in accordance with this to produce the results that we are seeing through the halving. So when looking at it, we need to always keep the wider macroeconomic conditions also bear that in mind, because Bitcoin is very quickly becoming an institutional asset, and more and more what happens in the behavior of normal assets is starting to impact Bitcoin. So we need to understand this and bear this in mind, that these factors could also impact what's happening in the Bitcoin market and the current cycle. So that is the end of the presentation. I hope everyone enjoyed it, and I think we'll take some questions now if anyone has something they would like to ask.
John, before we do, there's a comment which I think could give us a fair bit of discussion for a couple of minutes. But before we go there, maybe just a very much a layman's question from my side. You've given us a lot of indicators there and so on, and particularly from the American environment, the Federal Reserve and so on. What is your experience in terms of how Bitcoin is featuring, for example, in local markets?
Yeah, that's a good question, Tony. I think in local markets, our our Reserve Bank has done quite a bit of work trying to study Bitcoin and do position papers on it to try and establish how they want to handle it. So in the last reading of the papers, what I saw was that they were going to introduce a number of shall we call it regulations on Bitcoin. So things like enforcing like the foreign exchange policies on Bitcoin. So they would make sure that Bitcoin exchanges adhere to foreign policy exchange rules, which means that like a South African citizen can't just spend over R1 million on Bitcoin without because there are like limits that are allowed by the Reserve Banks. So you have to apply for additional foreign exchange. So that kind of thing is starting to come into the market, into our regulatory environment. In terms of our government's monetary policy on Bitcoin, it doesn't have a huge impact if if there's certain policies that our government try to introduce in the country, because a lot of the activity does happen across the world, and the most influential market and impact on Bitcoin is sometimes the US, and it's mostly because of the influence of the US dollar. So I think in South Africa, Bitcoin is well used. We're starting to see Bitcoin ATMs coming up. People are getting more and more comfortable. There's crypto exchanges being created. There is regulation coming in, but I think that's it's a healthy market here in South Africa. Yeah.
Awesome. Thank you for that, John. Very interesting. I personally have not yet had the what's the word I'm looking for? The encompassing of the risk that goes with it to go out and invest in Bitcoin myself. I do know a few people who have, and I suppose it depends on your appetite, for that kind of thing. But excuse me, but that aside, there's a very interesting comment from Mishek Savado, one of our members, and I thought this would be quite a good one for a little bit of discussion. He says, in terms of ethics, it looks like this currency works well for those who have knowledge of it. And personally, I find it unfair. Your thoughts on that? I'll make some comments just now, but I'm not the speaker, you are. I'd be interested in how you respond to that.
Yes. So I think if we look at the history of Bitcoin, it grew out of a movement that said there was in 2008 there was quite a significant financial crisis, and what people started realizing is that banks could actually, or governments could actually prevent you from drawing your money out of the bank if there's a significant enough crisis. There's all kinds of measures that can take place which you have no power over if governments or banks decide that they are in severe financial trouble. And so there was quite a bit of distrust in the system from there, and Bitcoin grew out of that thinking that maybe we can't trust the financial system as we do. Maybe we can't trust the government as we used to. So to Mishek's point about ethics and whether it's fair. So I think with a technology like Bitcoin, you have like various stages of knowledge, and what happens, you always get the early adopters, people in the middle, and then people that are late. And it's mostly because of a mindset. Okay, people that are willing to take risks will adopt early. Those that have a little bit more fear and anxiety about the product will take it on later. But in the end, those that recognize it and see it for what it is will naturally attract themselves to it, and it's like a natural kind of way of people choosing the product without the product forcing itself on the people. And I think it's a very natural way for the product to get adopted. Those that are technology savvy will catch on quicker. Those that aren't won't. But it's all good, because in the end, it will make its impact on the world. And I think there is a question about ethics, and I know Mishak thinks it's unfair, but I think that's when it comes to adoption of new things, that is the way that it works for most things that I've seen personally. But if it's unfair, then I guess it's because of the technological aspect of the, it's not easy to understand Bitcoin. So those that are not technology savvy will be later adopters. Yeah, that's pretty much my comment.
Yeah, thank you, John. And I mean, I found this very interesting. I say Bitcoin is not my area of expertise by any stretch of the imagination. But I was looking at the question a little bit more philosophically from what Mishak is saying. And he talks about, so the first thing is we're talking about complexity. Bitcoin, by its nature and understanding, it starts off with a certain level of complexity. But we're all in IT, and a lot of technologies that we deploy are complex. And until we learn them, they are complex. So maybe just to share a little story with Mishak, and I want to come back to this in a moment, because I think there may be an opportunity for a discussion about fairness and, ethics and fairness. Excuse me, but I'm getting, as we can all see, a little bit on in my years, and starting to slowly think about I might want to retire in a few years' time, and investigating what that would mean to me from the point of view of, surviving retirement, funding, and so on. And looking at our laws and regulations, some with regard to retirement, and the fact that they're changing with this whole two-pot tier system and so on and so forth, is very complex. And you need to go and you basically, unless you've, in that field yourself, or you've really kept up to date, much as you were saying with Bitcoin, you've got to go out and find a financial planner or someone who can start trying to demystify this for you and explain it. Now, is that unfair? And yeah, that's an interesting question. I don't think it's certainly not unethical. The question is it unfair? And I just very quickly Googled the definition of fairness, and it says impartial and just treatment or behavior without favoritism or discrimination. And then you could say, well, is it being discriminatory against because you don't have the know-how or the knowledge? So I think that's a debate for a different day. We were talking about Bitcoin halving today. But certainly that's an interesting point, Mishak, and something for us to digest. As I say, there are many aspects of our lives where there are things that we don't necessarily have easy access to information, and it's maybe complex to those people who don't, haven't been exposed to it and fully understand it. So thank you for that. That's something I'll put to our chair of our Social and Ethics Committee and see what she thinks about it, Jacine Overdeves, because that might be an opportunity for a future discussion. I don't see any. Mishak says "aish." There's a good South African word. But anyway, so thank you, John. I don't see any other questions. Were there any closing remarks from your side, John?
Yeah, I think when it comes to the halving, a lot of people will think that the price is suddenly going to accelerate on halving day, but that's not the case. So. Please don't throw your hard-earned money at it, hoping for a miraculous increase in price. Just be patient, and there will be a parabolic rise at some, few weeks afterwards. But through the halving and into it, there could be some volatility. So just be careful, and don't put in funds that you can't lose, and definitely don't put in rent money and things like that. So be safe, even if it seems a short thing and it's very tempting. Yeah, just be cautious in how you apply your hard-earned money. Yeah. Thanks, everyone.
Don't run away, Don, because we got a last question, and as we have still got a bit of time in hand, I'm going to pose it to you if you don't mind. I'm not sure how to pronounce this name. Kilm Oni, and if I mispronounced it, I apologize profusely, asks or comments, there are emerging cryptocurrencies being introduced nowadays. What is your opinion in Bitcoin still holding forth as the mainly used cryptocurrency?
That's a very good question. I think because it is the oldest and there is very good network adoption. So remember, like currencies like cryptocurrencies like Bitcoin have this network adoption effect because it's internet based and very much digital. It very much follows the network adoption effect, and because of that, it's over the number of years people have learned to trust it and learn to use it, and because of that, it's very well used and very well supported. So it's very difficult for new blockchains or cryptocurrencies to break into that, dominance. And Bitcoin has been dominant for the last number of years. Ethereum has challenged, but I think the difficulty with Ethereum was it trying to get past its, the high fees and the cost of running smart contracts. So they struggled with that a little bit, which has kept their growth. So it's never exceeded Bitcoin dominance. And I don't see any other blockchain doing that purely because of network adoption and because Bitcoin is the first. And, it holds a certain status because of that, and it holds a certain degree of trust that can't be easily usurped by any other entrant into the market. And I think when you invent something, you can't invent like 100 of the same thing. There's just no way that all 100 is going to come across the finish line altogether. There will be a few that dominate, and at the moment, those few are Bitcoin, maybe Ethereum. I can see Solana being put to use, maybe a few others, but definitely newer entrants are going to find it harder and harder because of the established blockchains that have high network adoption and the trust of a large user base.
Thanks, John. I think like with many things, I mean, it's that hackneyed term of first mover advantage, isn't it?
Yeah.
So Bitcoin being first on the scene, and as you say, having entrenched themselves makes it that much harder for the newer kids on the block, so to speak. But yeah, I mean, at the end of the day, natural competition will ultimately prevail, one imagines. But first mover advantage, when you sort of secured yourself in a fairly strong niche position, is clearly something that stands Bitcoin in good stead. Anyway, as I say, not my area, and Kilm says, again, if I've mispronounced it, says thanks, John. So I think we're going to call it quits at that stage. I don't see any further questions on the chat group. Suffice it to say from my side, John, and the Institute, to you, thank you ever so much for your preparation and sharing your knowledge with the less informed like myself. So we really do appreciate it. And a reminder to all of you who have attended, thank you so much. There should be a replay video available in a day or two. And also, John, do we have your permission for this to go up on YouTube?
Yes, that's perfect. Yeah, thank you.
Okay, awesome. So almost all our webinars go up onto YouTube within a week or so of screening. So you can review it there if that's what you wish to do. But from myself, from me to all our members who are on the webinar, thank you so much for attending. I recognize our chapter chair from Gauteng who's online, and others. Thank you so much. I wish you all a very, very pleasant evening. Stay safe, and we'll catch you on the next one. Bye all.
Thank you, everyone. Bye-bye.
Bye all.
Thank you, everyone. Bye-bye.